Ladies and gentlemen, good day, and welcome to the Man Industries Q3FY25 earnings conference call hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions at the end of today's presentation. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Pratish Urumkar from ICICI Securities Limited. Thank you, and over to you, sir.
Thanks, Lizanne, and good afternoon, everyone. And thank you for joining us today for Man Industries Q3FY25 earnings call. First of all, I would like to thank management for providing us this opportunity to hold the call. From the management side, we have Dr. Ramesh Chandra Mansukhani, Chairman, Mr. Nikhil Mansukhani, Managing Director, Mr. Sandeep Kumar, CFO, Mr. Rahul Rawat, Company Secretary, and Mr. Vijay Gyanchandani, DGM, Investor Relations. So without any further delay, I would now hand over the call to the management for opening remarks. Thank you, and over to you, sir.
Hello.
Yes, sir. Please proceed.
Yeah. Good afternoon. Thank you very much for joining this Concall. This is R.C. Mansukhani, Chairman of the company, and I welcome you all to our earnings conference call for the third quarter and 9 months of the financial year 2025. To start with, let me take you through the financial performance of the company, followed by the operational highlights. And now I am handing over to our CFO, Mr. Garg. He will give the highlights of the results. Thank you.
Good evening. Let me take to the financial performance of the company, followed by the operational highlights. In Q3 FY25, the external loan total revenue stood at rupees 746 crore, which is slightly 12% lower from on Y2Y basis. The EBITDA stood at INR 87 crore, which grew by approximately 2% YOY and 12% QOQ, with EBITDA margin of 11.6%. Net profit grew by 1% YOY and 7% QOQ to rupees 38 crore, with the PAT margin of 5%. On a consolidated basis, the total revenue for the quarter declined by 13% YOY of the INR 738 crore. The decline was mainly due to our export shipment on non-availability of vessels. If it wasn't for the delay in the shipment, our revenue would have been higher by approximately 66 crore during the quarter. The EBITDA came in at INR 84 crore, which grew by around 7% YOY and 13% QOQ, while EBITDA margin at multi-quarter high of 11.4%. Net profit was INR 34 crore, which grew by around 12% YOY and 7% QOQ. On a 9-month basis, the external loan total revenue was INR 2,317 crore, which declined by 1.4% YOY, mainly because of some delayed shipment which couldn't happen in this quarter, while EBITDA was down by around 2% YOY to INR 226 crore, with EBITDA margin stood at 9.8%. Same as corresponding period last year. The net profit for the period grew by 4.6% YOY to INR 97 crore. On a consolidated basis, total revenue for the same period was down by around 2%, YOY INR 2,323 crore, with EBITDA reporting at INR 270 crore, resulting in an EBITDA margin of 9.3%. The net profit grew by 5% YOY to INR 85 crore. Currently, we have a very strong order pipeline of 2,900 crore rupees that must be executed within next 6 to 12 months. Hence, we remain confident that we will meet our FY25 full year revenue guideline of INR 3,300 crore. And for FY26, with current visibility and also the new project which we are planning to execute, we can have achieved turnover of around 4,000 crore of top line. Our bid book pipeline is of rupees 15,000 crore. On our new project, our Saudi and Jammu projects are progressing in full swing. Both projects are on track and likely to start production in the Q3 of next year, FY26. Lastly, we have successfully completed the ERW plant assessment by Nikon for API 5L and 70 grade, and company started exporting ERW pipes. With this, we can now open the floor for question and answer sessions.
Thank you.
Thank you.
Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, to ask a question, you may please press star and one. We take the first question from the line of Darshil Pandya from Finterest Capital. Please go ahead.
Hello. Hi, thank you for the opportunity. Sir, just wanted to understand what will be the kind of debt levels for FY26 and FY27, since almost 815 odd crores we are taking it from the debt. So just want to understand that.
Yeah. The current date, Mr. Darshan, the current date is 135 crore. He is having the cash by way of FDR, our last year balance sheet also in the current also position. 230 crore. 230 crore. So we are a surplus. And to complete the project, whatever we are putting up over there, that is an independent company which is borrowing and doing the work, and the company is giving only the guarantee. So right now there is no additional debt in the main industries, but in future we will see what it will be worked out.
So this debt, you are saying that it is not on the books of Man Industries?
Right now, not only guarantee until unless they start the production.
Okay. But any ballpark number that what could be the debt levels if this once begins?
There will be debt burden will be the 400 crore for 390 crore for 390 crore for Jammu and 400 crore for Saudi.
400 crores for Saudi.
Our will be the guarantee, and they will borrow, and there will be independent model of the business. But our consolidation, we will get the benefit of the consolidation of the revenue in coming years.
Okay. And sir, since almost we are deploying 1,100 crores of capex, what is the kind of asset turn that we are expecting on a full year basis for FY27?
You are asking the revenue? What?
Yeah, since this new facilities I'm expecting that will be live in FY26 fully, and from our existing business, what kind of revenues can we see?
Our projections, our guidelines, and hopefully to achieve it. The next year, 25-26, for the main industry standalone would be around 4,000 crore. We are 25% growth we are anticipating. With regard to consolidation, there will be half of the year would be from Jammu and from Saudi. Yes, right now we are estimating around 1,500 crore, and then full year 26-27 would be our target is 6,000 crore plus.
Okay, got it. For FY26, you are saying 1,500 plus you expect from this two facilities coming in.
Once we start getting the revenue for the full year.
Full year, yeah.
For the full year?
Yeah. FY27 we are talking about.
Yeah. Got it. Fantastic, sir. Thank you so much, sir. Thank you for the opportunity.
Thank you. The next question is from the line of Amar Maurya from Lucky Investments. Please go ahead.
Hi, sir. Thanks a lot for the opportunity. Am I audible?
Sir, your voice is breaking up.
Is it clear now? Better?
Sir, slightly better. Please proceed.
Yeah.
Yeah. So, sir, first question is, what was your 9-month volume growth?
Sorry?
What was your 9-month volume growth? 9-month volume growth. What was your 9-month volume growth?
Volume growth in the, I have the figure of the amount only 2,300 crore. 9 months.
No, I'm just saying that is the value. So normally value may fluctuate based on the raw material prices and other things.
Question.
So, I mean, I just want to understand what is the business volume growth we had seen at an overall level.
Okay. The volume still we have not calculated. We are receiving the figures, but the volume is much higher than the last year.
Okay. What like it would be double digit or single digit?
You are talking about the growth?
I'm saying volume growth would be what? High double digit. You are saying volume growth would be better than the overall revenue growth which you had achieved in 9 months.
The volume for this 9-month period has been little higher than the current last year number.
Yeah.
However, because of the commodity steel prices going down, our total revenue in the rupees are reflecting little lower number.
Yeah. Oh, but volume is more.
Okay. And secondly, when they are saying that Jammu plant is now going to start in third quarter, right?
Yeah.
I mean, we were expecting that phase-wise we will start from second quarter or first quarter onwards, right? So now we are saying that whole of the plant or the phase 1 of the plant is going to start from third quarter?
Not phase-wise, because we were anticipating the phase-wise to start, but whatever we are saying, the full plant should start from the October onwards.
From October onwards. And for this plant to start, like we got the whole land in Jammu now.
Now clear.
Yes. All land required for the project is
now is clear. It was initial there was teething problem which resolved. Now the construction already started. Most of the equipment already arrived for the land, and the critical equipment from Europe and Japan already here.
Okay. So all plant and machinery also ordered?
Yes, long back. The delivery time is 1.5 years.
Delivery time is 1.5 years. And that you are expecting to reach everything by, so let's say October you have to start the plant, then all equipment should be there by March, right. April to your plant, right?
Yes. June. Many already arrived, and some equipments will come in the month of May, June, and then 3 months for erection commissioning.
And how about the Saudi progress?
Saudi going very well. The equipments we already purchased, and the construction is going on, and the 6 months it will take to start the operation. The equipment already arrived over there.
There also you are expecting October, November only kind of production to start.
Yeah.
And in next year, let's say the 4,000 crore guidance and then 6,000 crore guidance, whatever we are expecting in that 1,500 crore, we are expecting of this ERW and SS, right?
Not ERW. The
Saudi
4,000 crore our main company standalone, and the other companies, subsidiaries company, we are anticipating 2,000 crore plus in the full year. So that will be the 26-27. Then it will be 4 plus 2,000, 600,000 plus whatever the growth possible through SAW pipeline, which we have to calculate.
So in this 2,000 crore number, what would be your Jammu number and what would be your Saudi number?
Jammu, we are anticipating the first 6 months 500 crore. Next full year is 1,000 crore. and the Saudi would be 1,500 crore. So we are giving the conservative safe side 6,000 crore plus.
Okay. Got it. And in Jammu, what would the mix between this 1,000 crore, what would be the mix between SS and ERW?
No. Jammu is only stainless steel.
Only stainless. But because there was some small plant of ERW also likely to come in Jammu, right?
No. That we dropped because that we put here in Anjar. CRW plant we had Anjar. There was a small, it was supposed to come in the at Jammu, which we have put here.
Okay, so now whole ERW is in Anjar and Jammu will just have SS.
You are right.
So any reduction in the capex because of this?
No. It's the same.
Same.
Reduction, no or nothing.
So total capex for Jammu would be how much, sir?
Roughly 450 crore total.
And for Saudi?
Saudi 700.
So 400 plus 700, 1,300, 1,400 crores kind of capex. So sir, how we are going to fund it?
We are tying up with the loans. As we gave our guidance for the loan, I think somebody asked earlier, that around practically 790 crore will be funded
790 crore, yeah.
from the loan. Balance will be from the promoters' contribution.
4 plus 390.
Our own contribution.
Yeah.
Sorry, come again. What is saying? Promoters' contribution will be how much?
790 will be from the loan. Balance will be from our internal accruals. And
from internal accrual. Okay. And then I think we had also given some enabling resolution for raising further equity and all. What is that?
No, that we have taken we will see in future, if needed, then we'll see.
Okay.
Enabling, that was enabling only.
Okay. Perfect.
Thank you.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Dhananjay Mishra from Sunidhi Securities. Please go ahead.
Yeah, hello Nikhil ji. Just one clarification on FY26 guidance. Based on 9-month number, this year we will be doing 3,200 crore kind of turnover. And next year you are saying 25% growth on the standalone basis. So that will be 4,000 crore. And incrementally you are saying this Jammu and Saudi plant will be contributing 1,500 crore in FY26 itself, or it will contribute in FY27?
Okay. Your question for the current year, almost accurate. We have done the 2,300 crore and 1,000 crore we are aiming to achieve in the current quarter. So then our guidance was 3,200, 3,300, which is right. The next year we are seeing 25% growth in our business, this Indian business. And meantime, the production is going to start from seamless pipe from quarter 3 as well as the Saudi plant. So we are first 6 months we are expecting 2,500 crore addition, and next year we are anticipating 2,000 crore plus additional revenue apart from 4,000 crore and some growth next year, which will be announced subsequent. Right now, whatever we have order on hand, that's why we have 4,000 crore is easily to reach.
So 4,000 crore is I'm getting, that is understandable. So plant will start in Q3, both the plant. So in the first 6 months itself, you are giving guidance of 1,500 crore. So isn't it a little bit of aggressive guidance, or next year you are saying 2,000 only? So that is not, this number is not matching.
No.
I will repeat again. What we are saying, current year our guidance is 3,200 to 3,300.
Right.
FY26, we will generate 4,000 crore revenue from our existing facilities.
Okay.
And our new project will start producing from Q3 FY26. We will get almost 1.5 quarter revenue or make the most 2 quarter revenue. But depending on the schedule, October, November, when the product will start, depending on that, we'll get additional revenue in the second H2 of the next year, which will be around 1,500 crores. Total revenue which we are expecting as a consolidated level for FY26, 5,500 crores.
Yes.
Okay.
And FY27, we are talking about around 6,500 plus revenue.
Yes.
When the full year of production from the new plant will start contributing to the revenue.
So overall guidance is 5,500 for FY26 and close to 6,500 for FY26, right?
Yeah,
You are right.
Okay. And now coming back to the this debt position. So you said that we only we have 135 crore of debt as of now, but as per PPT we have already invested close to 400 crore in these two projects. So we had a cash of close to 400 crore. So that money has been invested in that project or it is still there?
We are investing every day, and 380 crore we already tied up. The financial arrangement already done, and debt will be drawn once the equipments are coming. LC is already opened. That is a regular affair. So 380 crore will be our subsidiary books, as well as 400 crore will be in abroad funding.
Okay. So as of now, we given loan to subsidiary in the close to 300 crore from our book.
We put our equity portion.
Okay. Got it. Okay. So and this entire thing will happen by September, all 1150 crore capex. Okay. Thank you.
Thank you. The next question is on the line of Ayush Jalan, an individual investor. Please go ahead.
Hi, good afternoon. Thank you for the opportunity. Could you please give some update on Merino shelters? Thank you.
Yeah, Merino shelter, as we already taken the resolution, enabling resolution to sign the deal, etc., from shareholders, and now the deal is likely to sign next 10 days, and we got some advance our solicitor, and other money also is going to some amount in next 10 days, and we execute the deal, and then accordingly we will announce the nature of the deal and everything as per the regulation.
Noted. Thank you, sir. I have no further questions. I wish you all the best.
Thank you.
Thank you.
Thank you. The next question is from the line of Varun Mehta from Wealth Link Investments. Please go ahead.
Good evening, everyone. This quarter we have seen an improved EBITDA margins. So is it due to ERW plant or due to product mix has changed or something has happened on that?
Mainly due to the product mix change. There are some order which has better profit margins, which is reflecting into our bottom line.
Because this is mostly the value-added products depend on project to project. So that's why EBITDA margin is improved, and I hoping the company it will continue to improve considering the order book position.
So the current order book of 2,900 crore we have, so it's more of a value-added product or commoditized?
Mostly value-added product.
Now, what would be the percentage on that, sir?
Percentage, anything between 10 to 14%, depending on which project, waterworks or value-added gas pipeline, oil pipeline. But that's why company is trying to achieve 12% average data like we did this quarter. But the volume is going to increase, and that's why we are hopefully to get the better realization.
Right. And going in FY26, sir, as you said, from Jammu plant we are expecting, and from Saudi we are expecting 1,500 crore of additional revenue.
Yeah.
Like Jammu plant, we are expecting EBITDA margin to be in range of 20 to 25%. So going ahead, I think in FY26, the margin should improve quite well for our company.
Yeah, 26, 27 will be the much better because once should be stabilized. Once stabilizing everything, that's why very conservative side, we are estimating same EBITDA 12% as a overall average, and then 26, 27 will be a much better position. But let's wait, and the new figure will come in future also.
Yeah. Okay. Thank you so much.
Thank you.
Thank you. The next question is on the line of Satyan Wadhwa from Proficient Investment Advisors. Please go ahead.
So could you give us volumes for December quarter and what were the volumes in September quarter?
What is your question? Can you repeat, please?
What was the sales volume in this current quarter, the Q3, and what was the sales volume in Q2? In tonnage terms.
It's already given.
I think I have told you that our has been little growth, slight growth in the volume.
2267, the current quarter, and 2302 was the corresponding.
No, you're talking volume.
Volume is higher. We are getting the figures, and because of the steel prices softened compared to last year, although that's why the volume was much better.
Correct. That's what I'm trying to get to is what is the EBITDA per ton this quarter versus last quarter? Because steel prices pass through anyway, right? So when steel prices go down, margins go up.
Yes.
So whether it's because of that, in terms of percentage margin going up or actual margin per ton has gone up.
Yeah. Right now we do not have the volume because we are getting the figures from the plant.
Okay.
The time, but volume is definitely improving because of the value-wise we are a little bit lower, but quantity-wise we are higher.
Right. And if you could just add the volume figures in future quarterly presentations, I would all the other pipe companies kind of give us what the volumes were.
Yeah.
You can break it down by type of pipe in terms of W and others.
Yes, sir.
One more question for me in terms of the Jammu plant, because it's SS seamless, right? Which is new to you. How long do you think it will actually take to stabilize production and get the right sort of quality that is required? And how much help will you be getting from the machine supplier or anybody else to stabilize production?
Okay. Regarding your question, we are new, but actually we are a metal man. That's why we know the metal business. Well, last 2 years we are working very closely with our equipment supplier, technology, market, etc. So I don't think so that it will be difficult to achieve our target. Some equipments already arrived from Japan, and some equipment from you are expecting next 3-4 months. That's why we are predicting from October onward the production.
October onward. Okay. So we should expect definitely the sales should come in the Jan to March quarter, right? Even if October, December is still trial production and just getting everything sort of sorted out in terms of quality.
Can you repeat your question?
I said, so actual saleable production will be in Q4, right? Mostly Q4.
You're talking about ERW?
About seamless out of Jammu.
It will be coming in next year.
No. October.
Okay.
From October here.
Next year, right?
Then
So
you are right. October will
Jan to March quarter next year.
Quarter 1.
26.
So there will be, the new plant, then will be the regular business over there, and then we'll pick up because we are doing the proactive actions we are taking to get as much as possible from the new plant. But market conditions are good, order not a problem, and that's why we are confident to get some value-added product from very beginning, which we are working.
And what, if any, approvals, etc., do you require for the stainless steel plant, the Jammu plant?
No, not necessary. What approval from government?
From any, do you need any approvals from anybody to sell it, or are you just selling it in the market, the stainless steel pipes?
Oh, no, not market, not approval required. Export, no approvals. Again, the Indian approval required. They are different things.
Okay, fair enough.
Yeah. Thank you.
All right. Thank you, and all the best.
Thank you. The next question is on the line of Darshil Pandya from Fintrust Capital. Please go ahead.
Hello.
Yes, sir.
Mansaf, just one question for you. With regards to the recent tariffs, the U.S. President has put on, are we, going to, see some issues with us as well? Just want to confirm.
No, this USA new tariff, it is not going to impact our industry because our most of the market in the Middle East, around 75% we have business to Middle East, export business, and the balance in India. It is not going to make impact to us because USA we do not have any much presence, very little presence, maybe hardly 5% of the turnover. I don't think it is going to make big impact to us. But now the USA anti-dumping, not anti-dumping, the increase of the duty, which is going to impact towards what kind, what degree, which we have to examine in coming time.
Okay. Maybe next quarter we might be talking about this then.
Yes, sir. Thank you.
Okay, Mansaf. Thank you so much.
Thank you. Before we take the next question, we would like to remind participants that you may press star and want to ask a question. The next question is from the line of Harsh Nilesh Wasa from SBI Securities. Please go ahead.
Yeah. Hi. Thank you for the opportunity. So I have a couple of questions. So the first question is that I missed on the capex part. So around 1,100 crores is the capex. So how much is spent and how much is yet to be incurred? So what is that bifurcation, or entire is left to be spent on the capex part?
Yeah.
So that is the first question.
Roughly we spend 150 crore. Our equity portion we already put in the Jammu, and the disbursement now we will take because our LC exposure already taken more than 100 crore. So that's why now the account will be debiting over there. So out of 380 crore, I think so the money will go very fast after 2-3 months once the shipment is done.
Okay. And so the loan thing, like which you had mentioned that you are tied up with like around 790 crores. So what will be the average cost of funds, and has the loan started or it is yet to begin?
The loans have not been started. Both the loans are tied up, but we have not drawn anything till date.
Okay.
Start drawing after, I think, when the LC due payment will be required. Currently, all the investment is made from our internal resources, internal accruals, that portion we have been spending in the project.
And by the rate of the interest, etc., the so far in 200 basis point roughly.
Okay.
Yeah.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Viraj Mahadevia from MoneyGrow India. Please go ahead.
Hello, sir. Hi. Your FY25 target of 3,200 crores is almost spoken for with your 2,500 crore order book. Are you confident of this 5,000 crore number for 26, given that your bid book is about...
Sorry to interrupt. Sir, we are not able to hear you.
I said, are you confident of your FY26 number, given that your bid book today is about 1,500 crores, or 10% of the bid book is what one can assume?
We have already confirmed order of 2,900 crore in hand.
Correct.
And that doesn't include the orders for the new projects.
Mm-hmm.
But our guidance is that 2,900 plus other orders expected in next year, we'll be completing 4,000 crore from our existing capacities. So we are hopeful of achieving 5,500 guidance in FY26.
Okay. Thank you.
We have to complete our order. We have to complete in 1 year maximum. Still the 14 months to go to complete the year, and that's why we are confident. Ultimately, in business, we have to do the confidence and the projections also. That's why.
So I think you need to meet those numbers. You need to win 1,100 crores of orders in the next 2 months.
No problem. We already our bid, 15,000 crore bid is there, and we are very confident to get it.
Understood, sir. Thank you.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. Participants on the conference, if you wish to ask a question, you may please press star and 1. The next question is from the line of Yash Mehta from Art Ventures. Please go ahead.
Yeah. Thank you for the opportunity. Sir, I wanted to ask that the revenue guidance for FY26 is 5,500 crores. What is the volume growth are we expecting in FY26?
So volume growth, because of the market is softened few months, in last 1 year, so there's a volume growth we are anticipating around 20-25% more.
This is for FY26, right?
Yes, sir.
Okay. Thank you very much.
Yeah.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. Participants in the conference, if you wish to ask a question, you may please press star and 1. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Viraj Mahadevia from MoneyGrow India. Please go ahead.
Hi, sir. Sorry. Thank you for taking my question. What will be the net debt to EBITDA in FY26 and 27 as you see it?
26, 27, as we already communicated, there will be the borrowing in the subsidiaries company, and main industry is having only guarantee, and partly in some cases. So in main
Sir, at a consolidated level, you'd still have to show it as a borrowing.
Around 2000, if you're talking about 27, after both the projects implemented, our will be around 950 crore.
Yes.
Roughly.
Yeah.
And EBITDA guidance we are giving same around 12%, 11 to 12% going forward, which we are maintaining now. We are hopeful to maintaining same EBITDA margin guidance in the next year.
Understood. So I'm just doing the quick math. So we're talking about 1.25 net debt to EBITDA, 950 on about 780.
Yes.
Okay. Okay. Perfect. Thank you.
Thank you.
Thank you.
Well prepared.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. Participants, if you wish to ask a question, you may please press star and 1. As there are no further questions, I now hand the conference over to the management for the closing comments.
Thank you all the participants in this earnings con call. I hope we were able to answer your questions satisfactorily and at the same time offer insight into our business plans. If you have any other further question or would like to know more about the company, please reach out to our investor relations manager at Veloram Advisor. Thank you very much.
Thank you, members of the management team.
Thank you. Lots.
Thank you very much.
Ladies and gentlemen, on behalf of ICICI Securities, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.